Good afternoon. This is Tim Wegman at BIS Commodities, taking a look at the markets, the commodity markets here for the week. Let's start out and just see where we close for the week. We'll start with Dees corn, up 5.5 cents. We at 373 3/4 in the December contract, just shy of 374, and also that 50-day moving average right there. Beans slightly lower on the week, down 1.5 pennies, 867.5 in November. Dees wheat down 3.5 cents, 517 1/4. Taking a look at cattle, we've seen October cattle down almost $1.50 this week. 112.32 is the settlement price. October hogs last day traded today, settled against cash index. 68.75 was the last tick. It's up a little bit on the week. We're going to follow against the December contract, which is trading at a significant discount to October at $55 is where the close was there today. Taking a look at the oil market, looks like it's down roughly about $2.75 at this point at 71.60 a barrel, still trading here late in the day. Friday stocks look to close maybe around 1,200 points lower in the Dow. Somewhere around that 25,300 area, still trading here late in the day. The big news item this week for corn and soybeans was our monthly supply and demand report. And the big idea there again was what were we going to do with quarterly stocks and yield estimates. And we'll back up and take a look at the quarterly stocks. We knew for corn we had to bring in larger stocks due to finding an extra 138 million bushels in that quarterly report. So we're going to add that onto the bottom line of last month's and then incorporate that as our beginning stock. So we knew we were going to have a larger number alone with just the stocks, everything else left unchanged. Going into the report, the trade was expecting maybe we'd see a little bit of a bump in yield estimate and maybe a bump in export demand. And well, we got one of the two. We did not get a bump in yield estimate. We actually dropped yield not quite a half a bushel down to 180.7, 180 bushels, 0.7, and that's down from 181.30 last month. So a little bit supportive there for corn. But we did get our demand increase in export sales, 75 million. We did see a decrease in the feed number, 25 overall. We did increase our carryout in corn, not as much as anticipated. We were looking at maybe a 1.9 carryout, came in at a 1.83, a 1.813 to be more precise, and that's up about 39 million from last month. So somewhat supportive to the corn market moving down the road, and not expecting much change in the yield historically from this point forward. Demand still is very good, especially at the price levels that we're at right now. Taking a look at soybeans, we were looking for a bump in ending stocks there as well. We seen in our quarterly stocks we had to increase the beginning inventory for this year, 43 million. So we knew that was coming into play, and we were expecting a small increase in yield as well in this report, and we did get both. We did get that bump up with the ending stocks number, and we did see an increase in production as far as bushels per acre. We increased it to 53.1, up from 52.8 from last month. But we did see a reduction in acres, enough to offset the increase in the bushel per acre. And essentially we did carry over then that 40 million bushels into our carryout number. That left us at 885 million bushels projected. A very large projection for the carryout number this upcoming year. And even though we are up 40 million from last month, it was a little bit less than anticipated from the average estimate coming in there. And we're seeing some strength maybe on the futures market since the release of that report due to that number. So what do we look at moving forward? We know we have a burdensome supply of soybeans. and we know we have an adequate supply of corn. When you step back and take a look at it, it's going to be harvest from this point forward. Now, harvest is ahead of the 5-year average for corn. Right now, it is behind on beans. I suspect we're going to fall further behind, obviously, next week with beans moving forward. A lot of keys beyond harvest into the upcoming year. When you take a look at the ratio of old corn, or excuse me, new corn, new beans, do we see anything as far as acres that are going to be offsetting things here? That's probably a discussion that's several months too early, but that's something to look at right now as far as projecting for next year. Soybeans, even though we did make a 6-week high early in the week, we have not closed there here at the end of the week. I do think the fundamentals are very bearish in here, and that'll be the key number to look at this week's highs on beans. Can we see some outside money continue to flow in here to own beans? And can we see some outside money to come in here and own corn too? So it's easy to be bullish corn demand long term. You take a look at that supply, it's certainly a bearish number here on a short term basis. Now you step back and take a look at soybean production. We're not the dominant world production leader like we are in corn and beans, and that's because South America and Brazil is planting as we speak. They're projected to be about 10% planted compared to 5% planted last year at this time. So the trade will continue to, or start to, monitor South American weather from this point forward as well. So that's something to keep an eye on as far as the soybean market is concerned. And obviously exports is a concern. We're way ahead of last year at this point as far as corn export sales. We're way behind last year's beans as far as export sales. And in fact, as a percentage of export sales, we are at a 10-year low on beans, what we have sold on the books compared to what we're expected to sell. Not to say that they won't come in down the road, but that's where we're sitting right there. So the concern moving forward too is you could see another cut in exports sales, which would continue to increase that carryout number as well. Something to be watching in weeks, several weeks ahead. Commitment to Traders report showed that we did see some fund covering in both corn and beans. The funds bought back about 24,000 contracts of corn and left them short about 34,000. Soybeans, the funds bought back about 3,000 contracts. They're still short roughly 41,000 bushels of beans. This report was through Tuesday. I would suspect we've reduced those numbers since then as well. Moving on, taking a look at the livestock markets, taking a look at cattle, a little bit lower on the week as far as futures are concerned. We've seen some outside money flow in weeks, months coming into the cattle market. Are they going to defend that? We did close this thing on the lower end of the recent ranges. We're going to need to see some technical buying or the funds to come in and continue to support their position. Because when you take a look at the cash, really nothing has changed. We traded 111 again for the most part across the nation, the South, wider range up here in the Corn Belt, but that cash market has continued in the same trading range here for the most part for about the last 5-6 weeks. Boxes this week didn't do much either. We're going to need to see a little bit more support in boxes if we want to push this cattle back up and try and look for a stronger cash trade next week and or futures trade. I think that'll be the key. That choice is right around 202. We didn't see that thing deviate much beyond $2 or $3 here most of the week. So I think that is the big key, the cutout, the demand out there, something to keep an eye on next week. Pork demand's been steady as well. The pork cutout actually was steady on the week from last Friday. Cash was actually a little bit lower in here. We've seen futures-led rally in here with the October contract that expired today. We pulled cash up to it this week, and the big driver in this, in hindsight, is been some money flow coming in here. But again, we have the African swine flu, which is kind of on the back burner, but it has not gone away It is cases are still popping up in China and in Europe, and that is a big concern moving forward. If it continues to stay over there, one would make the argument that would be good demand for the deferred months in hogs. And when you take a look at the deferred months, there is a premium built in there right now to the front end of this contract. So we